All right, everybody wants to know what's going to happen to the stock market based on the election. And I've been getting this question now for months, and we're getting closer and closer. We're less than a week away, and there's a lot of turmoil out there. There's a lot of anxiety about the election, which is totally understandable. We live in a crazy time, and a lot of people are very anxious about it. But I'm here to tell you today, I'm going to show you some information to help you just kind of calm that fear when it comes to your investments, bring down that anxiety a little bit. There's a lot of great information out there and data that we're going to look at over history to just really support that whatever happens in the election, it's not going to, kill the stock market. It's not going to wipe out the US dollar. It's not, you shouldn't go out there and sell everything and buy gold tomorrow. You're hearing all those ads right now about that. So I'm going to give you some information to just help you understand, hey, we don't have to really get that worried about what's going to happen based on the election. I'm going to show you all that information here. Lots of great history to talk about. And the other thing I want to tell you is this is not at all in any way a video about how you should vote. This is not a video about, hey, you should do this because so-and-so is going to win, or you should do this because this other person is going to win. That's not at all what this is about. You should never really get your politics mixed up with your investment philosophy. I've been saying that for quite a while, and I'm going to show you exactly why that is. So we're going to dive right into this. These slides are from Dimensional Fund Advisors. Very thankful to them for putting all this together, and we're just going to go through each one of these. All right, so let's take a look. Market returns during election years. And there's really three things to remember. And the first one is that it's very difficult to identify any kind of systematic pattern, based on who wins. And that's really just saying that, we can't look back and say, hey, when a Democrat wins, this happens. When a Republican wins, this happens. All the time. There's this pattern that goes on based on who wins. That doesn't exist. And I'm going to show you that here in just a minute. So there's no reason to, decide one way or the other what to do with your money because there's really no pattern to it. Right. The other thing is that market returns have been positive in both election years and in subsequent years. And we're going to take a look at that. It's been positive this year in 2024. And who knows what's going to happen next year. But on average, it's positive during the election year and the year after. And the last one is that expectations associated with an election outcome are embedded in security prices. And what does that mean? That really just means that it's already baked in the cake. It just basically means that, there's not a way for us to, have some piece of information that nobody knows about yet, and then we're going to take advantage of that. All the information is already out there. All the speculation is kind of baked into the market already. And will it swing one way or another based on what's happened? Maybe a little bit, but over time, there's no real way to just know something that nobody else already knows. And I've always said that, guessing on what's going to happen is not a good idea. The strategy for long-term investment is a waiting game. It is not a guessing game. It's very important. And we're going to see more data about that here in just a second. So those three things are super important to remember. All right, let's take a look at the months of presidential elections. So this chart, what it shows you, and it might look a little daunting here, but I'm going to explain it. It's really not that difficult to understand. There's the distributions of returns every month. So if you could put a little notch on a monthly return from 1926 all the way till December of 2023, this is what you would end up with. All of the returns that are from like 0 to 1% or 1% to 2%, those all fall right in the middle, and those are the most frequent. Obviously, you're not going to have a 1 month where you have a lot of 20% gains or 20% losses. That's not going to be the middle of the curve. 20% gains and 20% losses are way out there on the end in a 1 month time frame. So a lot of the return that happens most often is 0, 1, 1 to 2%. And then if you could put a little red or blue line on a month for every election cycle, you'd have to place it very sporadically throughout here because there's not a bar in this graph that's all red or all blue. There's not all blue on the positive or all red in the negative or vice versa. It's just not like that. It's just spread out all over the place. So monthly returns, for example, we're about to head into November. There's no data to suggest that we know what's going to happen in that month of the election based on who wins, because that hasn't been what's happened in the past. It's based on this chart. So that's good to know. All right, let's take a look at the next one. So now we're looking at the return of the S&P 500 during and after an election year. Okay. And this is from 1928 all the way to 2023. So that what's interesting is the average return the year after the election has been 10.67%. The average return during an election year has been 11.5. And if you look at this chart, just about all of them are on the right side. There are many of the returns during these different election cycles have been positive. We had one big negative one there, during the Obama-McCain election. And in 2008, of course, neither of them were president at the time. That had a ton to do with everything that happened with the housing crisis that led into, the 2008, the beginning of the Great Recession. All that stuff happened then, and neither of those people were president at the time. So there's a lot of good data here to show that during the year and after art is positive. A few negatives, obviously, but mostly on the right side of that chart, which is good. Okay, next one, the annualized return, and that just means, if you added up the returns for each year for the presidential, for their term, what would it be on an annualized basis, every year, sort of averaged out. And this is for the S&P 500 again, and you can see nearly every administration has had an annualized positive return. It's been 9.5% on average. Pretty much every administration, you got to go all the way back to Hoover, which of course, we're talking Great Depression times. We had little tiny one there at Nixon. Again, George Bush was in the negative. Bush had really kind of three things that I would say contributed to that. This is kind of the lost decade kind of stuff and everything. There's also, the tech bubble burst right before he was there, before the election year. He had, 9/11, had the end of his term was 2008 with the beginning of the housing crisis, all that stuff. So, there's a lot of things that happened during those 8 years. But for the most part, everybody else during all the presidential terms were positive. So that's good news. So it's not all the other way where, like all blues are on the left and all reds are on the right or vice versa. It's just not like that. Okay, let's take a look at the bond index. Okay, so we're going to look at the bonds too, because not everybody just owns the S&P 500. Everybody has sort of a mixture of these two things. And if you look at the bond index during years of the election and after, almost entirely positive for both areas. Again, just two little blips, but for the most part, positive all the time. And then the next one is the annualized return of the bond market. Everybody's in the positive. The most recent one is not, just because we had rising rates, we had inflation, the bond market pretty much, went down major in 2022. So that led to that. The chances of the bond market now going to be negative again are pretty low because bonds are not super volatile and we've already had this big bottom out. So things are going to really kind of start coming back now for that. Okay, let's take a look at how the markets have rewarded long-term investors under all these different presidents. If you can see, all the way back to Coolidge, the stock market has this upward slide that goes to it, no matter if it's red or blue. All right, so during all the different years that we've had different presidents, the S&P 500 has continued to go up. So it doesn't go, red up, blue down, or blue up, red down, blue up, red down. It doesn't do that. It's this long-term slope going upward. And I'm very confident in saying that, if you look 8 years from now, probably going to have an upward slope as well, no matter who wins the election. And that is one thing that you do have to remember. Presidential elections and presidential terms are, in the grand scope of things, if you're a long-term investor, are not that long. I mean, if a certain person wins, we're only going to have 4 years. If the other person wins, it's really only going to be 8. And we're going to have something new happen after that. So, it or could be 8, I guess you could say. So, that's a short period of time when you're talking about, planning your entire, retirement life. Or so short periods of time there when it comes to that. All right, let's look at the next one, because we all know you have a president, but we also have the control of Congress, what happens during the control of Congress. And we have, sometimes it's, Republican control, sometimes it's Democrat, and many times it's a mixed. So even no matter if it's mixed, Republican or Democrat, we still have this upward slope. And there's no period of time really when Congress is in control one way or the other that causes, again, blue down, red up, or red down, blue up. It doesn't work that way. So there's so many different things that happen that have an effect and impact on the direction of the market. And I'll give you an example just on the last quarter that we had. I'll show you how many different things affect the market. this is a really good chart because, some of these things we've already forgotten about. People will call me and they'll say, "Oh, what's going to happen when this happens? What about the strike? What about this? What about that?" And it's these short periods of time. You don't really know how that's going to affect the long-term market. And I always just encourage people, hey, don't look at days to make your decision. Almost look at decades. It's kind of like days versus decades, or like I said before, it's not a guessing game, it's a waiting game. And just look at some of the things that happened here just in the last. This is from the end. This is the last year. Okay, this is the last 12 months. Look at some of these things that occurred. If you remember these things, we had Israel declares war on Hamas. Well, we're a year past that. We had a new Speaker of the House. We had job openings that fall to a 28-month low. We had a U.S. border deal is declared dead. We have stock indexes book records after inflation eases. We have an Iranian president who was killed in a helicopter crash. We have the U.S. starts to fall. U.S. housing falls to a 4-year low. Biden drops out of the race. We have this job market that's weaker. We have the Fed's move to try to, really change rates. Remember, they brought them down real quick. We had, most recently, we had the thing about Congress passing the resolution so we didn't have a shutdown again. Isn't that interesting how whenever there's a shutdown, we usually have this big, it's going to be a catastrophe if things shut down. Do you even remember them mentioning it recently? No, because we had so many other things going on. So there's all kinds of stuff that happens in the world throughout the year that impacts the direction of the market. And it's not just any one thing. Okay. So market returns during election years. I hope that gives you some thought and, to kind of hopefully calm down a little bit if you were anxious about it. Many of you probably aren't. You're just like, hey, I'm just going to I'm going to roll the punches because I've done this before. But in case you were wondering, that's what has happened in the past with election years and after the election. And again, you should go out and vote. It's one of the greatest things you can do. And it's all going to be over in about a week or so. And then we're going to be talking about what happens next. So hope this helped you. And certainly give me a call if you have any more questions about your account or anything like that. But just wanted to give you all this information. I think it's really good stuff to look at when it comes to elections and long-term investing. All right. Thanks a lot.